next panel, we have next panel discussion will be investment logic on tokenized securities. I'd like to welcome our moderator, Rod Zhao, co-founder of Hybrid Summit, to be coming up stage. And we have also speaker Shirley Xu, CEO of UCF Capital, and Lucy Gesmerian, Senior Manager of Crypto and FinTech, PwC China and HK, Simon Dixon, CEO and co-founder of Bank to the Future, and our last speaker, Dan Huang, CIO of GSG Asset Management. Please welcome our moderator, panelists.
Thank you, everyone. Our panel just getting started, and hi, Lucy.
I'm not sure. Oh, yeah.
We wanted to wait a little bit to give Andrew a little hard time because he was gonna try to do a song and dance while the rest of the panel was ready. So please help us welcome our esteemed guests, Lucy, Simon, Shirley, and Dan.
Dan is still getting ready.
Thank you. Dan's preparing. He spent an hour in hair and makeup. It's going to take some time. He's very excited about today. Just got back from the salon. So, here we go. Let's give Dan Huang a big hand.
Oh.
Yeah. It's a new environment for Dan. He's usually, when he's mic'd up like this, is doing some Korean boy band routine. So, investment logic for tokenized securities. What an amazing topic. I think a great time, and we have an amazing panel to be able to share this with us. Lucy joins us, Senior Manager at PwC for FinTech and Crypto. Thank you, Lucy, for being a part of this panel.
Pleasure.
Simon Dixon, of course, the co-founder and CEO of Bank to the Future. And Shirley Xu, CFO of Pine Peak Group. I believe a massive group with over 30 billion US on assets under management. And Dan Wang, which is the founder and chief investment officer of GSG Asset Management Group. I think on everyone's mind, and I think the theme of today is really security tokens. And I'm really excited about today's discussion, and especially this panel in particular, because we're going to really deep dive into the comparison between what is a traditional STO versus a traditional IPO. What are the costs, the friction layers? What are the efficiencies when we're using blockchain versus the traditional capital markets? And in our pre-discussions, we've had some opposing views. And so I'm going to turn it on to Shirley. First of all, Shirley, you know, you've been in venture capital iBanking for many, many years. You control and are a big part of a massive fund, if you will. And tell us about what you see STO versus IPO in your initial opinion.
Well, I mentioned it earlier, I've been doing investment banking for over decades, so not to show my age. We tapped into Big Fairy in 2015 when I was at UCF Capital. So then we, homegrown a lot of the accessories in the whole blockchain cryptocurrency space. CoinSuper was born, C-Block was born, Hicks Capital from the UCF family. And early on in my career as an investment banker, I also tapped into working as a VC and private equity. I actually went on to do entrepreneur. I was a e-learning founder for NetBig back in 1999. So in 1999, me and plus our founders see the future of internet in the whole space of education. And we envisioned that Wikipedia will be born, just as Richard Lee has envisioned now, where everything, media, phone, telecommunication will be in one phase. And what my view is that blockchain is just exactly at that infancy stage. So if I don't get involved, who's going to get involved? So that was back in 2015. Now we sort of, okay, we got coin exchange, we got all sorts of stuff. What can we do? Let's up the game. And so STO is just a normal development. From what I see is that a serious player want to do tokenization has to build a STO, because you want to face institutional investors who want to see transparency, who want to see liquidity, and that is the future. And as I mentioned, if you don't have a minimum 1 to 5 million to get that started, don't go into that space.
Now, To be fair, the conversation we had earlier was 5 to 10 million. After Lucy had convinced Shirley it should be less, she's now going 1 to 5 million. But I think it's very different. You know, a year ago, everyone was talking about ICO. You get a right group, a good business plan, or a white paper together. Hopefully, you can raise money. The decentralization aspect, the whole liberation of commerce, all those different things. And now we're going back to centralized, dealing with governments, legislation, processes that protect the consumers, which I think we're all excited about, especially people in traditional markets. And when you're adding blockchain technology, it makes it more efficient. So that number does get less. Maybe Lucy, you can tell us from a PwC standpoint, you're starting to see more STO deals that you guys are consulting on. What does that look like? And what type of companies are approaching you?
Yeah, definitely. So hello everyone, I'm part of PwC's crypto team based in Hong Kong. We're a professional services firm, so we support crypto clients with tax advice, accounting advice, all the traditional legal regulatory services, but for crypto clients specifically. Our clients are crypto exchanges, crypto funds, but as you say, increasingly we've moved from servicing ICOs that were coming to us to STOs. So we're definitely seeing the evolution of the client base that is coming to us for associated services. In terms of what they want to tokenize, there's really a whole range of different assets. I think we need to make sure that we remember that security token is a very sort of generic term. And actually it just means that it's regulated like a security, but there are many verticals within that category. So what everyone is starting with, particularly in Asia, is definitely we're seeing a lot of interest in the real estate STOs. And you know, that kind of makes sense because I think the exciting thing about STOs, at least to begin with, is that you're making an asset class that was previously illiquid relatively liquid. You know, we haven't yet, the oil that's in the machine is not quite working as it should be yet, but the potential to make these assets liquid is really exciting. So that's where clients are starting, and we're definitely exploring how we do that. Equities are already a pretty liquid market, right? And not least because we're starting with private placement. So as the tech is being built out, the primary issuers and the platforms are being built, the liquidity in the exchanges aren't quite there yet. So if you're going to do equity, it's just private placement, and actually the existing equity markets are functioning just fine. So there's not the demand there. So clients definitely focusing on real estate and actually esoteric assets like fine art. You know, that's where a lot of interest is coming through. How do we make these previously illiquid assets liquid?
Thank you, Lucy. And we could talk a little bit more and do a deeper dive on the sales cycle, typically the process of how long that investment gets locked in from an illiquid standpoint. Real estate being a great use case. And before we move on to Simon, which I know has an amazing use case for an STO, typically a real estate investor looks at buying a unit, waiting 3 years until that unit's done, looking for the appreciation of that value and hopefully making a gain from there. Whereas now throughout the process, as long as the regulatory allows the secondary sale of that asset, or that security rather, you're able to get out at month 12, month 18, month 24. The unbundling of real estate assets as well, from a revenue, it could be interest rates, it could be backed by real estate. There's so many ways to securitize that real estate asset. So we agree, I think real estate is going to be the most compelling case study, and most of the things I think that we're going to see being listed on these exchanges as they start to emerge will be real estate. So we're very excited about that. Simon, CEO and co-founder of Bank to the Future. I know you guys have a very interesting use case, but before that, maybe you can tell us a little bit about your company.
Sure, yeah. So my name is Simon Dixon. My background was investment banking, left in 2006, just in time. And I spoke at the world's first Bitcoin conference and wrote the first published book, Bank to the Future, that included Bitcoin in 2011. And invested in 120 different companies in the industry, from Bitfinex to Coinbase to Bitstamp to Kraken and all of the major household names you know today. Banktothefuture.com was a platform that we started in 2010 to support the growth of the Bitcoin and fintech industry. Any of our investors, there was only 2 ways of really investing in the industry. Either you were a venture capitalist or you were a Banktothefuture.com investor. In order to get exposure to, and I think we've had about 7 unicorns now in the crypto space. So That's that's Bank to the Future. We just launched a secondary market for trading, so you can now buy and sell shares in companies like Bitfinex, and we're rolling out another 10 markets over the next 4 months. So it's focused on the private equity side, all done in a centralized fashion at the moment. We just launched the BF wallet where people can tokenize those assets as well, and kind of iterating out a centralized process into whether there's actually a demand from we've got 65,000 investors that all made a lot of money in crypto that reinvest in the crypto industry. So we get to test products on people that are kind of used to, chucking several million on a platform, investing without having necessarily the face-to-face roadshow relationship, is most of our investors. So.
Great. Let me turn it over to Dan. Dan, GSG Asset Management. I think one of the kind of overlooked areas of crypto, and certainly if they use your services, you could have saved a lot of the companies during the ICO, kind of the devaluation of the currencies and the major drop. Can you kind of talk a little bit about that and where the role of GSG will come in with the new STO environment? Because I think treasury management, asset management is a very important part of the company.
So GSG, so our team, we all have an institutional background. Myself, I was on the sell side in banking for 12 years before going to the buy side at a hedge fund in Hong Kong. And basically our team, what we do is we try to provide bespoke investment advisory services, mostly to like ICO projects, but also to exchanges and select high net worth individuals. And so we're not a fund. What we do is we kind of, deep dive into the specific, portfolio management or financial, problem that a specific company may have, and we help advise them on how to approach that problem. So with respect to STOs, it's something that we're very interested in because we're very institutional by background, and so we naturally kind of gravitate towards things that I guess are regulated or kind of fit within the mental framework that we've been born and bred in terms of our careers. I guess we're coming more from the investor side. I feel like my colleagues on the stage are probably coming more from the origination side, and so we're talking about investment banking or the professional services that a project would need to list or listing on an exchange or through a platform. From our perspective, we would like to see how the rest of the equation works out. So for myself, coming from the sell side, at a bank, if you're going to do an IPO, a big part of that cost is in underwriting. It's the book runner who takes the deal and then with the co-leads goes and syndicates out the issue to their investors. That's where a big chunk of the cost comes from in an IPO. I don't think that it should be that much different in an STO. On the origination side, yes, clearly there should be a lot of interest. Everybody wants to liquefy their illiquid asset and unleash liquidity premium on these assets. But if you can't convince investors, institutional investors or high net worth to see the value in that asset and see the value of doing it in this particular form, which has its own hurdles. They're going to have to learn the technology. They're going to have to trust, the service providers that they're working with. They're going to have to trust the person selling them the product. These are all uncharted, waters. And, so far as we can tell, we have not really seen anybody kind of take this issue head on, because part of the nature of this is that we're talking about assets that's much smaller in nature as opposed to like a $25 million, $100 million IPO. That's just working its way very easily through the banking system. You're talking about maybe like a $10 million commercial property or something like that. And so this space, almost by its nature, is going to be highly fragmented. So it's going to be very maybe regional in orientation, and you're just not going to get like an investment bank like Citi or JP Morgan or Goldman to look at this deal and be like, oh yeah, this is interesting to us. Yeah, we can make $5 million in fees on this $10 million project. Like, it doesn't make sense. So somebody needs to kind of emerge and be effectively what these investment banks are to the current traditional capital markets process, and do that for STOs. And I don't know who those parties are. I would love to meet them if there's anybody out there. But
I want to pick on that. This is why I said it's 10 million minimum. 10,
She's
5 to
back
10,
to 10
right.
again.
Partly the
I brought it back.
reason
I brought it back to the 10 million.
We all want to go
you
shopping.
need to have a large size to get the institutional to want to play VC, right? The institutional is like, I want to get into the blockchain, I want to get into tokenization, but you got to make it big enough that my mandate is allowing me to play in this illiquid, but you're creating a liquidity in a VC environment. So that's why you need to be big enough size.
Right. And that's where we got back to 10 now.
Correct.
Okay.
You want a serious players, then you gotta go for
Absolutely
bigger
right.
size.
And I think that there's not enough discussion about that. I think a lot of the things that you've seen, not mentioning any tokenization platform names, but they're so focused on the issuance, the tokenization platform of that security, that they're not really giving you the whole picture of what it takes to be successful. I mean, you can get tokenized for 25,000 on an automated platform, but what does that really get you? A smart contract. But really, it's very different from an ICO. This is a different world now. And the good thing is we're attracting very substantial players. The access to capital is much larger now. The type of projects will be, of course, more and more relevant and will add tremendous amount of value to the investor for a number of reasons. So tell me what that 5 to 10 million would be spent on.
Give example. This morning, Hashgraph was here, right? And then of course, this is just off my head. If I were them, I would do a STO because they're big enough. They have the cash from the previous round. They would just go out to institutionals right now.
And why would they do an STO versus a traditional IPO?
Because you put them on the map to run faster. It's still traditionally how Alibaba has born, how Amazon has born. It gives them currency. It's actually, can we increase, like, the capital market is an old game, but a lot of the things has been born, tested, and I just think just another way of tokenization of it.
Yes, I'd probably say I'm not convinced that STOs are going to make that much of a difference in markets that are already functioning well.
Yeah.
So in the IPO market, granted, I think there's a use case of people that own Bitcoin that don't live in the US or Hong Kong or something like that want to invest in the US markets. Then there's apps like Abra where you can do that with Bitcoin, and you probably don't need an STO in order to do that, to tap into that liquidity. The IPO markets are functioning well. They've got a process. I think the main difference with STOs, trying to look a little bit further forward, is that if we create a market where we don't create silos of I need to list on the London Stock Exchange, or I need to list on the Hong Kong Stock Exchange, or I need to list on the Tokyo or whatever, if we create the ability for people to take those assets off the exchanges and have an interoperability between that, then I think tokenization might make some kind of difference. I really hope that we converge on a standard whereby we don't create these monopolistic exchanges again in the STO market. So interoperability is really good there. But I think the two use cases that we're seeing is, firstly, we've been working on private equity. Private equity, I'm not sure STOs are going to make a big difference as well. That might be a controversial one. But having been with so many crypto investors and seen so much, we've built everything that they want in a centralized way, and we're giving them the ability to take their equity in a company like Bitfinex and then put it into a token. And then maybe that will be listed on another exchange in the future. We're iterating to that, but there's zero demand at the moment because all they wanted is exposure to the asset class. And the token doesn't really make a difference because you would default back to the centralized database if anything went wrong in the token anyway. If someone got hacked for their token, you just default back and not quite seeing where it goes there. But I think the use case that we've seen that had tremendous demand, that I think made a massive difference prior to the bull market, is things that you can do with STOs that you can't do with traditional markets. And if we've got time, I can go through that use case if you like.
Yeah, let's just see how the pace of this goes. But I think you've covered from a macro level those differences. As Lucy was alluding to earlier, there will be things on the STO market that you will not see on a traditional market, capital market, right? And this is where it gets interesting, because generally speaking, you're saying, well, it seems like it's parallel, it's the same type of friction layers, it still costs a lot of money, where is the value chain proposition for an STO? Global market, 24/7, certainly. Interoperability, that's critical. I think exchanges, STO exchanges, as they emerge, need to work together and collaborate together to create a more liquid market. I think there's got to be a lot of self-compliance to make sure that these exchanges are listing good projects, especially in its infancy. As this nascent STO market develops, we want to make sure that the investors are or have access to good things instead of just fly-by-night companies. Let's talk more about that, Lucy. What do you see STO offerings? 5 million, sub 5 million. Does that make sense? Do you see any clients that you could see that could be successful with smaller offerings?
We see a lot of clients talking about it, right, and investigating and going through the thought process. I do think, generally speaking, we're still at the building phase and experimenting phase. And we're sort of thinking of the possibilities, where it might make sense, who are the target investors. As you say, institutional investors don't really need liquidity. They're actually fine with the liquid markets. It works just fine for them. So it's really for the retail investors. But then there's obviously the tech, that the platforms, the actual code within the smart contract needs to be able to cater to liquid retail markets. And I think that's where we're at. That's what's being built with the primary issuers right now. And I think once that is built and once regulators get comfortable with listing digital tokens, which is happening, SIX Exchange in Switzerland is getting comfortable with that. So they are going to be listed and we are going to see how the buyers and sellers come together. I think the next wave where we start exploring with new things to tokenize and hybrid structures is going to be where it gets really interesting, like tokenizing your brand or intellectual property or elements of a balance sheet that, why do you have to buy the equity of an entire company? What if you just want their ad revenue stream and you want to tokenize that? Real estate that you tokenize, and if you buy a fraction of that building, it gives you access using your smartphone for a period of time, combining experience and usability with a financial product, a traditional financial product. And I think this is where we're going to go, where that for me is the really exciting part of it all. And we're quite far away from that, several years, I would say.
Yeah, and you're right.
Regulations, if nothing else, needs to catch up with the pace of change as always.
But adding experiences to that process, like there are many case studies of fractionalizing sports teams, right? So where you not only get a part of the revenue, you're also a fan, and it makes sense for both. From the owner's perspective, you're creating a bigger fan base. They have more incentive to support the games. But from a fan basis, based on the number of token you have, then you can have a VIP experience. Maybe meet the team, meet and greet, have front row seats, or whatever the case is. And that could follow the entertainment business, that could follow so many different sectors. So that's very, very exciting.
And you couldn't combine that before. It was just that you needed the tech to make that possible, manage the life cycle of that asset, and now we can do it.
Yes.
We're getting there.
Yes, we can. From a regular standpoint, because we spent quite a bit of time working with a lot of regulators, they are excited about the STO side because there's so much KYC and AML, which is so different from 3-4 years ago, where the anonymity of I can have a random wallet and be nobody and have that. Whereas in this case, we know exactly who we are. You know from a cap table who's holding your token, and really be able to service your shareholders properly, I think. And those are the benefits from a compliance side, from a regulatory side, and I think from a company's perspective. So that's going to be exciting to see that, and the different variances and the combination of incentive buying programs with rewards, as well as the security aspect of it where they're generating revenue. Liquidity, let's talk about that quickly, because that's one of the main topics. Simon and I spent some time in Mexico, not together, with a whole group of other people. But we talked about liquidity and the absence of it, the fragmentation of these markets, and the importance of what you said, Dan, in silo environments, which we really cannot afford to do. Where do you see, and how do you see, and when will you see a proper liquidity for an STO?
Well, having been around, so for those of you that have been around for a while, the ICO market started in approximately, I can't remember whether it was 13 or 14, where people were trying to create assets on top of Bitcoin, and we had the Mastercoin was the first ICO in 2014, and then there was a few others since then. And it wasn't until 2017 that we got deep liquidity, and it was 3 years of trying to figure out what the hell a token on a blockchain was. So I imagine a similar thing happening in the STO market where, okay, people have started to think about it in 2018, maybe 2021, we might have something that looks more liquid. But again, maybe this goes to an example use case of what we're seeing is if you get the dynamics right of the STO, the liquidity is there if it solves a real problem. So one of the we were fortunate to be involved in the first STO, which was the Bitfinex hack recovery token. I'm not sure if there's any Bitfinex customers here, but in 2016, they were hacked for 120,000 Bitcoin at the time, valued at about 72 million. And they had the choice of either following the path of traditional liquidation proceedings, like Mt. Gox did, and no one's received their money even when that happened back in 2013 yet, or do something innovative. And in 2 weeks, they were back up and running because they used an STO in order to create a debt token for people that were victims of the hack. So they took 72 million from customers' funds. They gave them a token, which was a promise to repay, and they created a market for it. And so if you didn't believe in Bitfinex's ability to repay, you could sell it at a discount on the market, and the market became a prediction market for the recovery of Bitfinex. At Bank to the Future, we allowed them to convert those tokens into equity, and gradually, as more and more, about 55 million was converted into equity, and Bitfinex was actually up and running, trading, repaid everybody. The token actually had 10x on the price. They paid another 20x in dividends from trading profits. And the people that were least skeptical got to get out of that situation and liquidate. The people that believed in it actually got to make one of the most profitable investments we've had on our platform. So, the recovery was literally 2 weeks, as opposed to Mt. Gox, which still hasn't paid out. So it's when you see situations like this, you get a very unique, specific use case of something that would not have been possible without the STO market.
Fantastic. Dan, we had a conversation about the liquidity. What has to happen to have this proper liquidity in the secondary market for security tokens?
Well, you're talking about it like it's like one thing. It's not one thing. When you're hearing these guys talk, there's a million different things, potentially. Like it could be, somebody's random, like little property in the middle of nowhere that they're listing. If they want to spend money to do it, they could. Or it could be, and then you're going to get interest and you're going to get liquidity on that guy because everybody, and probably half the world would be interested in buying or selling that token. Everybody would have an opinion about it. One of the reasons why Bitcoin is so liquid and has so much adoption and why there's a lot of liquidity in market makers, I believe, is because there's a lot of smart guys in the world where half of them, maybe not half, but some of them believe that Bitcoin is worth zero. And there's a lot of smart guys, equally smart guys, that believe it's worth 50,000 or a million. And nobody can really have a claim on the other that, in terms of valuation, that they're totally correct. One of them could be correct. And so when you have that kind of, market where some people believe it's undervalued, people believe it's overvalued, you can get a lot of activity, you get a lot of volatility, you get a lot of speculation. That may not be able to translate into STOs. If you're talking about an illiquid asset that people have a general idea of where the boundaries are in terms of price. So say there's some commercial building, it's worth between 100 and 120 million dollars. That's general knowledge. People can just kind of triangulate and figure that out. I can probably tell you that if anybody wanted to make a market on that thing, there'll be 101 bid and 119 offered, and nothing will trade. So that's the sort of problem with STOs in that, you know, people have a general idea of what they should be worth, and they're not, you know, and most of these assets are not the kind of assets that are going to go 30x. You know, ICOs had a lot of interest. You know, a lot of these utility tokens have a lot of interest because the value is arbitrary. You know, if you bought it here and you buy it there, yeah, why not? I can kind of see like, you know, this price or that price making sense. Like certainly people were buying, you know, Ethereum when it's up at 1,200.
Yeah, I think. Go on, Karen.
Sorry. Yeah, go ahead.
No, I was just going to say one of the trends that we've definitely seen is as wealth is generated in the crypto market, they want to diversify and invest that more widely. So when we first started, it was impossible to raise about $500,000 for one of the best Bitcoin companies that you know of today. There was no liquidity. But then when Bitcoin started increasing, we found new markets of people wanting to diversify their Bitcoin into equity. Then when Ethereum became a thing, we did a product for Ethereum from launch in Ethereum mining. When people got wealthy with that, they wanted to reinvest that. And then we had the ICO craze, and that created a lot of wealthy people. So we've been through these trends. And as the market cap of the crypto market goes up, you tend to see a new breed of high net worth investor that didn't exist before. And I think the people that understand this market the most are the people that get wealthy from the market, as opposed to trying to get institutions that are not allowed to or don't necessarily have the desire or belief in even Bitcoin to try and get them to look at this asset class.
That's an argument. Only because I think that's a very small field of people that have made money and kept it in crypto.
Or they bought the
Small
Porsche,
now, but I think
the yachts.
It's small now. I think it's small. I think, in my opinion, humbly, I think we need the institution. We need people that have been outside looking in, that was finding a more structured regulatory environment to be able to invest in that had those things in place. We need that for a bigger growth.
But I'm not sure they want the token. I don't think they want the token.
That's a great question. I think they will evolve to want the token because of the things that we talked about, because of the things that you can't do with a standard security, the flexibility, the global market, like to not have to be in a certain exchange like you mentioned, to be able to have a token, one token in one exchange that can access 30 countries versus having to be only listing in London or the Canadian exchange or Singapore or Hang Seng or Shanghai Index, whatever the case is. So there are advantages to that, and it's something that we could continually discuss. But
so I think it's the individual speculator, the venture capitalist joins in,
right.
Then the institution.
But what I would like to see is individual speculator that has not bought Bitcoin or Ethereum. One of the challenges that I had when I came into this whole space was the intrinsic value of a lot of these coins. The first thing I looked at a company was what's the valuation, what are they basing that valuation on? Is it price of earnings? Is it equity? Is it future forecast? Is it net present value? What are those things? And none of those things existed when we were valuing these ICOs. Now they're coming back full circle, and it makes sense now, which makes sense to a lot of us and a lot of people that have been investing in traditional capital markets. But I think they can't have ignored the curiosity of this whole big boom, the cryptocurrency boom. And I know a lot of people want to be a part of that, but they just didn't get it and didn't want to make that connection. And now with the more regulated environment, I think they will start to make that connection. It'll still take a few years to mature to that point, but I'm excited about that. So on that note, Shirley, tell me from an investment banking perspective, what are the kind of things you're excited about that you'll see companies that are using a security token offering versus IPO and the valuation that you think will be necessary to be attractive? Because your standard valuation for an IPO, that's a given, right? Whatever the market may bear based on a number of factors. We know the tech, there are some non-fundamentals where they don't have a monetization model, right? But they have a subscriber-based model that could be valued later versus somebody that has a very specific set of this is what we're going to make from these many sales. What do you see in the STO world? What would you look for?
Wow, what they're doing outside is really loud.
We're missing the party. Can you close the curtain so we can quiet it down?
And tell Andrew to quiet down a little bit. I want to go back to before the valuation answer to yours. It's the regulators. Some of you probably read last November, Hong Kong SFC has made a huge change to. They have never outwardly spoke about the whole crypto space. And they had a directory sandbox and the coin exchanges and the various different moves that we see in Singapore, in Philippines, in Thailand. So Asia's really waking up to catching up to what's happened in Switzerland and different parts of the world. I think that is already set the sort of the foundation of the whole market that's getting ready for a regulatory environment for this new world in a sense. On the valuation side, I still think it's like in the air what you're willing to pay, the buyer's willing to pay versus what the seller's willing to benchmark themselves. I still believe it's technology driven and user base driven.
Do you feel that there has to be a bigger discount because it's a new medium of investing? Do you feel like, hey, this would normally, if it was a traditional IPO, it would be valued at this, STO, a little sexier? Or do you think just the price or the access is enough for them to be excited about that?
This is all about the quality of the advisor, the sponsors.
Right.
Right. So in the regulatory world, you have a sponsor with a strong underwriting, distribution power. I still believe that matrix works in the securitization tokens. If you have an advisor had a great placement power, they could get a much higher valuation. And that they could do the dance about why your technology, your community was that much money.
Yeah. Great point. So we have a few minutes left, and I know if there's any audience members that have a question for our panel guest, please raise your hand. We have somebody that has a roving microphone.
Hi. Thank you very much. Just two questions. First, I run a fund, and so I have to worry about custodians. Wondered what your thoughts are. We don't want to invest in a product that's going to be the next MF Global or Lehman Brothers. Second question is, I guess by definition, if your venture companies are going public through STOs, I think the gentleman said already that decentralization is a bit of a far-fetched goal because ultimately the company has to retain control to make decisions on dividend payments, secondary offerings, and so on. Is that a fair thing to say as well?
Who wants to answer that? I think...
Custodian is a major problem for a regulated institution that wants to enter this space. The current solution is you need to have excellent personal security. You need to use unique passwords for everything you do. If you've got the same password in Facebook, Gmail, and some other service that you log in, then you're dead in this industry. You need to know how to use two-factor authentication and store onto hardware wallets. That is a nightmare for the average person or the average institutions to do. So fortunately, entrepreneurs are coming along right now and they're making real progress. Some of our portfolio companies like Coinbase are making custodial solutions, BitGo, other companies, Gemini. So the whole custodial challenge and Fidelity are now entering the market as well. So Fidelity were there in Cancun at the conference, and it's interesting that but they're seeing things like, well, these STO assets are a bit far-fetched. Ethereum is a bit far-fetched. We can only focus on Bitcoin right now. So the custodial industry is being built for Bitcoin, and then others are creating solutions. So it's not quite ready for you as a regulated institution, but it will get there.
And they're focusing a lot on that, though. There's a lot of trust companies, licensed trust companies around the world that are moving towards crypto custody for security tokens.
Can I just make a point on that? There is also a difference between custody of security tokens and cryptocurrencies, right? If you lose the private key to your cryptocurrency, you've lost your asset, you've lost your money. It's a much higher operational risk. But if you lose your private key to a security token, there is recourse to get that reissued and cancelled. It's an entirely different type of token. So the associated operational due diligence and governance and controls is very different for security tokens to cryptocurrencies. And I think it's important to make that distinction.
I also want to add is that Eugene runs a traditional fund, and so he's interested in this space. Just to shows how much interest. And then on what Lucy just said, that gives them comfort because the security token knows the operational side they have a recourse.
Right, absolutely. And every security token holder, the exchange, the issuer has all their data. And the
Yeah.
wallet is tied to that person, an individual. So there's no third-party wallet transfers or anything. It's very important as part of the KYC AML process that those compliance layers are built in, that that person that is buying that security is the qualified buyer, and that their wallet is attached to that identity. So
Yeah,
and that can be built in, right? To the
yeah,
code
it
in
is
the
built in,
smartwatch.
yeah.
Yeah, so the second part of the question on are we going to enter decentralized bearer assets again? Not a chance in hell. In order for us to go back to decentralized bearer assets, as much as that future might be interesting, you have to persuade governments not to care about money laundering and not to care about investor protections and not to care about tax. If you can achieve that goal, then we'll move to decentralized bearer assets again, I think, without the backup centralized database.
So everything, I think, has come full circle. We're back to centralization. We're back to government oversight. We're back to compliance. And all the things that we're hoping to avoid as an industry in 2014. Well, not some of us, where I think a lot of us on this panel agree that that should have been the case. And I think that's a promising future for mass adoption. And it has to be structured. It has to be regulated. So with that, we're out of time. We want to thank you so much. Thank you, Lucy, Simon, Shirley, and Dan for being a part of this panel, I think. And I'm hoping that a lot of you got a lot out of this panel. And we will all be here. If you have any questions for any of these speakers specifically, they'll be on the side to answer any of those. So thank you very much, everybody, for being a part of this. And we'll have a wonderful afternoon.
Thank you, thank you, thank you, thank you. Thank our speakers for sharing some of the insights on tokenized securities.